Khiem Do, head of Asian Multi-Asset Group at Baring Asset Management, where he helps oversee about $13 billion in assets, joins us this morning. You've been aggressively buying into shares. What about now?
Yes, that was quite a change of asset allocation for us, because in the second half of last year we were a bit more conservative. But at the beginning of this year we were buying, yes. And at the moment, yes, we continue to pick up stocks.
Okay, well, you know, we've been talking to a lot of equity strategists and stock strategists around. They were saying that they were expecting 20% gains for this year, 25%, but we've already seen 10 in the first 6 weeks. So how much more can we see for the rest of this year?
Well, mathematically, we have another 10 left to go.
Yes. But if you haven't gotten in, I mean, will you actually be able to reap the full rewards? Is it worth it, the risk-reward profile at least?
Well, I think that if we compare that to cash is earning 0%, and the 10-year bonds is earning you about 2% per annum. So I think that if one expects another 10% to go, and I think that is not unreasonable, really, because if you look at the valuations of markets, it's still not expensive as yet.
Okay.
So if we compare against the alternative investments, then if we think that there is another 10% to go, and I think that we are in that camp, then definitely yes. Okay,
and what have you been buying? What have you been making money on?
I think that as far as equity markets are concerned, I mean, last year, Asian emerging markets were very poor, because people were selling them down, you know, based on fears of economic slowdown. So this year they have rebounded. So I would think that, you know, as far as this year is concerned, as long as people don't think that China is going to hard land, then they have to buy Asia and emerging equities.
Okay, and that's what they've been doing so far this year. Okay, but what about, of course, the European side? We've been talking a lot about Greece and Moody's coming out with their downgrades. What do you think is going to happen to Greece, by the way?
Well, the poor Greeks, the poor Greeks will have to cut back quite significantly.
Well, some say they should have cut back a long time ago.
Yes, indeed, I know. That's right. I mean, the whole market is waiting for them to do the right thing. But I think that there is no other way, because they owe so much money and they can't fund themselves. So if they want the EU to fund them, or the ECB to help to fund them, they have to do the right thing. And, you know, just like Asia did in 1998, right? So we have to do the right thing, and so the Greeks will have to do the right thing.
Okay, but does that mean that Greece is going to get their next bailout fund? Does that mean Greece is going to stay in the euro? What happens to this European saga?
I think that in the short term, I think that they will get the funding, and I think that they will. I think that somehow go through this year, you know, like you know, broken arm and broken leg, but still, I think that they will still survive. But I do think that, you know, the longer-term prospects are still a little bit gloomy for Greece.
Okay, so, you know, there's so much optimism for this year, and what I find surprising is when there's so much consensus, isn't it time to look the other way and maybe take a look at the bear calls out there as well? Because didn't we start off last year pretty much similarly, higher in the first part, and then we know where markets went at the end.
True. That is correct. But I think that the one different thing is that at least I think that the ECB has acted this time around in December with the Altro 3-year repo, and they're going to do another tranche. I think the PBOC last year was very tight. This year it looks as if it's neutral and maybe a little bit easier later on. And also, you know, Mr. Bernanke came out with a statement that he will continue to keep rates low. And the U.S. economy is not like falling apart. It is actually recovering a little bit. So I do think that you know, the valuations also are much more attractive at the beginning of this year compared to last year.
I know I asked you this before, but you didn't tell me what sectors you were buying in, but what kind of stocks have you been picking up?
We can't talk about stocks.
I know, but sector-wise.
Anyway, sector-wise, industrials, I think consumer discretionary, and some banks as well. Because some of the banks are just, you know, too cheap. And I mean, our banking system is not broken. And I mean, it was sold down alongside with, you know, Europe and US. So.
Okay, Khiem, good to see you. Enjoy the rest of your week. Khiem Do there, Baring Asset Management.